Hello, everyone. Thank you for joining us today, and welcome to this educational presentation where today I want to talk to you about a strategy that I've been applying actually now for 45 years, and I continue to apply this strategy every day in my own personal trading. I'm going to talk about that today, but before I begin, I want to start out with what I learned trading on the floor of the stock exchange, because that's where I first started trading on the floor of the Pacific Stock Exchange some 45 years ago. Here's what my mentors taught me when I was struggling tremendously, the way many of you have in the past, or perhaps are struggling right now. And this really made a lot of sense after I fully grasped the concept. And it was this, that the market, not some guy on TV, not some earnings report, not some economic report, but the market, what I'm trading, is always giving you a clue as to which direction it wants to go. It was always hard for me to understand this concept because I always thought I was supposed to get an idea or some clear direction from someone or something else. But let me show you what I mean here. Let's look at this chart in VRTX, all right? Now, someone looking at this, just from the small amount of data that we have here, the small sample size, would say, well, we're in a short-term downtrend, right? I mean, obviously, we're going lower. Well, that's the conventional way and the way I used to analyze what the market was doing. But here's what I'm going to share with you today. Here's what my mentors taught me, because listening to the market, having the ability to listen to the market just off of the bars I see right here, I'll show you that we're actually in an uptrend, in an overall uptrend. And secondly, just off the data in front of you, a buy signal was generated right here using a few simple rules. Now, had you taken that buy signal, you could have potentially captured 48 points. And all of this was, once again, simply taken from what the market was telling me, not from what the earnings were, not from what some economic report was telling me, the jobless claims or whatever, not from what some guy on TV or in a chat room was saying, but simply from the chart in front of me. I know a lot of you may say, well, Steve, this is technical analysis, right? I'm not really a technician. It takes me a long while to understand this. It's really not my style of trading. Well, because of that reason, I teamed up with Proprietary Strategies and we developed the PTS Primo Charting platform. This is the educational platform that teaches traders how to trade. And everything I'll teach you today is one click away on our platform, okay? So this promises to be a great educational presentation. Thanks for joining us today. My name is Steve Primo, President and Founder of Specialist Trading. If you're new to my webinars, you'll find out that we're all about educating you. You see, it's our philosophy that the reason why most traders fail is not because their strategy doesn't work or not because the markets are unruly or they're just not cooperating. It's really that you're taking your cue from someone or something else. All of your decisions are made by maybe going to a chat room or finding out what some guy after the market closes, what he says about the market, what he likes and doesn't like, or maybe from some indicator that you don't understand what it's based off of or what it does is telling you where to buy or sell. This is the way most traders make their trading decisions, myself included, when I started 45 years ago. And in my opinion, why most traders fail. You see, you have to put yourself back in the game. You have to be in charge of your own trading destiny. In my 45 years of trading, that's the only way you can become a consistent trader. The good news is I started specialist trading with Proprietary Strategies to educate traders so that they can make their own decisions, all right? We don't have a signal service. We don't tell traders what to buy or sell. We never tell traders what we think the market's going to do. That's up to you to decide. What we do is simply provide you with sound fundamental education that has stood the test of time. And you'll see that today in today's educational presentation. Now, before we begin, we are required to share this with you. So please take a moment to view our disclaimer. I'm going to show you a lot of performance today using the strategy that I apply on a daily basis. But please remember that we can in no way guarantee that any of the results I'm about to share with you will be repeated in the future. Also, please remember that all examples are strictly for educational purposes only. Now, if you haven't done so already, or if you're new to my presentations, I'd like to take this time to invite each and every one of you to follow us on Twitter. I would suggest copying down our handle there because if our information or our style of educating is a little foreign to you, well, there's a lot more examples and a lot different ways to understand it on our Twitter page. Every day I post financial wisdom. I also post examples that our strategies have generated in signals and in just techniques. So lots of great ways to become familiar with our style of teaching and our trading. So please feel free to follow us on Twitter. So remember, we are different from other webinars you've attended. We're not going to tell you what we think the market's going to do. Is it bottoming out, or is it just setting up to go lower, or what's the perfect stock to buy or the perfect crypto to sell or whatever you want to do? That's up to you to decide. Once again, you see, we're all trained to ask somebody or something else to tell us what to do, or else we're all trained to ask the most important question we think, and that is, what do you think of the markets? You should never ask anyone that, because basically when you ask someone, what do you think of this stock? What do you think of this market? What do you think of this time frame? What you're really doing is saying, I don't know. I don't know what to do. I'm not experienced or skilled enough to trade. So why don't you tell me and I'll follow your advice? And that may work in other endeavors and other categories, but it doesn't work with trading. The only way you can become consistent is by being provided with sound fundamental education and then making your own trading decisions. Like I said earlier, remember, a good mentor does not trade for you. He teaches you how to trade with a specialist edge. And you'll see that devotion to education in today's class. Now, this is a class, as I just said. So like all classes, please ask me as many questions as you'd like, but please wait till the end of the class to ask. I have a lot of slides to share with you, and I don't want to stop for every slide or we'll be here way too long on our Wednesday, okay? Also, please remember, as you see in the chat box, I've written down, please remember to disable all cameras and microphones. This is a static presentation. It's not going to be an interactive Zoom presentation where we're over sharing our pictures and videos over the internet. This is just a educational presentation where I have a PowerPoint slide. So please remember to disable all cameras and microphones. And then lastly, each and every one of you will be getting a link to this recording. So if you have to leave early, or if you have technical issues, don't worry, you'll get a link to this recording. You can watch it whenever you like at your own leisure, okay? So remember, disable all cameras and microphones, ask questions at the end, and we're ready to start today's educational class. So let's begin. Now, I want to share with you a couple of edges. So let's get right into it. This is rule number one, or edge number one. Now, remember, these are extremely simple, but you're going to see how powerful they are when I show you how they can be applied to trading. But you can start applying these rules or these edges to any strategy you have right now, any method, or you can build your own method based on them. And I really think you will increase your odds for consistency tremendously. So rule number one, if price is above the 50-period simple moving average, the overall trend is up. Conversely, if price is below, the overall trend is down. It's that simple. You don't need to have a ton of indicators. You don't need to see patterns, higher highs, higher lows, or vice versa. You don't have to have moving averages crossing over. All you need to know where price is in relation to the 50-period simple moving average. And this doesn't require a specific time frame. If you like to trade weekly bars, just add a 50-period moving average to that. 50 periods of weekly bars. If you like to trade 5-minute bars, have a 50-period moving average based on 5-minute bars. That's it. Let me show what I mean here on this generic chart. Most traders looking at this would say, Steve, there's no trend here. We're going down, back up, back down again. But once we add the 50-period moving average, we ask ourselves, where is price in relation to that moving average? It's above. So that means the overall trend is up. It's that simple. Even though it may look as if we're going sideways, the overall trend is still up. Now, conversely, if we look at this generic chart right here, same thing. No trend, right? Down, back up, back down again. But once we apply the 50-period simple moving average, we ask ourselves, where is price in relation to that? Well, price is below. So that means the overall trend is down. See how simple trading can be? You uncomplicate things when you learn how to listen to the market. See, the market's telling you that. Not some guy on TV or not someone in a chat room, but the market is telling you that, well, price is below the 50, so the overall trend is down. Now, why is it so important to know this overall trend? Well, because of the way we teach is based on the overall trend. In our basic methods of trading, you will never buy below the 50 and you will never sell above. So in other words, if your strategy gets a buy signal, you want to make sure that that buy signal is above the 50-period moving average. Those setup bars, or that bar that you're ready to buy on, is above the 50. If it's below the 50, most likely the odds are against you and it most likely will not work out. All right, so let's go to rule or edge number two, okay? And that is where we looked at the overall trend. Now we want to focus on the shorter term trend. And here's how you do it. Once again, by listening to the market. When a bar closes in the top 25%, the top quarter of its range, the market, not some guy on TV, not even some guy on a webinar, the market is saying, I want to go higher on the short term. Conversely, when a bar closes in the bottom quarter, in the bottom 25% of its range, the market, not me, not some indicator, the market is saying, I want to go lower. See how simple this is? Now, if you don't understand that concept, take this generic bar. It doesn't matter if this is a monthly bar of Australian dollar or a weekly bar of Apple or a 5-minute bar of the E-mini futures. Makes no difference. But what you want to do is divide the bar by 4 separate but equal parts. And if you close in the top 25%, and on top of that, if you are above the 50-period moving average, you have a very high consistency for this going higher. Why? Because the market is saying, I want to go higher on the short term. So see, now you have, if price is above the 50, you're in sync with the overall trend. And if it closes in the top 25, you're in sync with the short-term trend. So there's no need to look at 2 different time frames. I know so many new students say, well, Steve, you know, I'm getting a buy signal on a 5-minute chart, but on the daily chart, it's a sell signal. Yeah, so there's no reason to look at different time frames. In my 45 years of trading, I found that to be an urban myth. That really has shown no level of consistency. So we don't teach that. You only have to add the 50-period moving average and then look at where the bar closes, either the top or 25%. Now, let's say you are below the 50-period moving average. Well, as we see here, let's just look back at this. We are above the 50-period moving average, and there we close in the top 25%. And see how someone may have said, well, if I kind of go back here, well, this is overbought here. Why did it go up? Well, we're not concerned with overbought. We're concerned that it closed in the top 25%, and it's telling you it wants to go higher. Now it dropped down, and someone would say, yeah, see, that didn't work very well, because look, it went right back down again. Well, we're still above the 50. And what do we have here? We close again in the top 25%. And what if you had sold on this bar? How well would that have worked? You see, sure, you're going to see down days, strong down days above the 50, and you're going to see strong up days below the 50. But remember, trading is a numbers game. 2 steps forward, 1 step back. We're not going to say every trade is going to be a fantastic winner. We're just trying to make you a consistent trader. You see, if you're looking for a home run, if you're looking to score big, well, that's more of a gambling mentality. And sure, you'll have these tremendous big profits every once in a while, but most likely you'll give it all back, because that's the way gambling is. You ever look at a gambler's results? They say, oh, I did fantastic this month. And then the next month they've lost it all. Then the next month they make it back. And then the next month they lose more. You don't want to trade that way. That's how you know if you're a gambler or if you're using a gambling technique, because it's just up and down like a roller coaster. What you want to be able to do is trade like a professional. That's a very slow but steady uptrend in your profit and loss. And that's what we're trying to instill in you. Sure, it doesn't work 100% of the time, but that's okay. It's about longevity. Longevity equals success in trading the markets, not hitting a home run. I can tell you wild stories about guys that made hundreds of thousands, if not millions of dollars when I was on the stock exchange floor in a small matter of time. And they've all given it back. Not one of them is even trading anymore because they're all busted up. So how important was that to make that killing when you gave it all back months or years later? Now, let's look at this example. Let's say we are below the 50-period moving average. And now we divide this bar by 4 separate but equal parts. And if we close in the bottom 25%, and once again, we're below the 50, we have a high level of consistency that the market wants to go lower. Why? Because you're in sync with the overall trend, and this bar is in sync with the short-term trend. So as you look at this example here, we are below the 50. And someone could say, but yes, Steve, but we bounced up here. Remember, that's a shorting opportunity. That's not a buying opportunity. Don't get sucked in just because you have a quick bounce, because what do we have here? We closed in the bottom 25%. And how well would this rally have lasted if you had held on to this, right? Remember, we're trying to put the odds in your favor. Every once in a while, you will see some nice bounces below the 50 and some nice sell-offs above the 50. That's okay. We just want to have a higher level of consistency. Now, you just saw these 2 edges, these 2 rules. Guess what? These 2 techniques make up the preliminary rules to a strategy that I've been trading for over 45 years and that I continue to apply on a daily basis. This is strategy number 4. The first strategy that I was taught by my mentors some 45 years ago. Let me give you some of the highlights of this particular method. It's a pattern recognition strategy. So we're looking for a pattern that repeats itself over and over again in all markets and in all time frames. It's designed for traders looking to catch momentum. Now, like I often say, when I first started trading this 4 decades ago on the floor of the exchange, we used it to catch momentum to get in and out of a trade, sometimes in 5 minutes. But we've devised and designed ways now that you can hold on to a trade for days, weeks, months if you like. Remember, you're in charge of your exiting, your entering, and your stop placement. We give you the tools and methods you need to make those decisions, but you're in charge. If you want to hold a trade for 5 minutes, by all means, go ahead. If you want to get out 2 weeks later, by all means, we teach you how to do that. Now, it only uses one indicator. You already know what that is. That's rule number 1, the 50-period simple moving average. Now, the advantages of trading this method are, 1, it's extremely consistent, and I'll get back to that in just a few minutes here. But consistency is basically a method that's able to recoup losses, because consistency doesn't mean you're always going to have winners and nothing but winners. Consistency is an awareness that you will have losses, but you're able to recoup them very quickly. All right. And I'll show you in just a few minutes an example of an extremely consistent method. Number 2, it makes you a part of the process. Remember, most traders aren't a part of the process. Most traders go to a chat room and find out what everyone likes, or listen to some guy on TV and find out if he's supposed to buy or sell this particular stock, or they wait for the earnings to find out if the earnings tell them it's okay. But when you're doing that, you're basically taking yourself out of the process. You're not making the decision. You're letting someone else make the decision for you, or something else. You make the decision, all right? That's how you become a part of the process. And then finally, it's designed to be as simple as possible. You ever see traders who have been trading for a relatively short time, and relatively short is 5 to 10 years, in my opinion. That's still a novice. That's not trading that long. Most of their trading plans are extremely complicated. Tons of rules, tons of indicators, looking at different time frames, different patterns, just too complicated, all right? Most traders who've been trading 30, 40, 50 years have just a few rules, maybe 4, 5 tops, maybe 1 or 2 indicators at the most, usually just 1, like the 50-period moving average, and that's it. You keep things simple, and that's how you get to that road to consistency. It's the easiest thing in the world to overcomplicate your trading. Anyone can do that. You know, you can be trading for 2 weeks and pile up as many indicators, as many rules as you like. It doesn't take a lot of character to do that, but it takes a lot of discipline to strip away those things that you've been taught, what my mentors called useless noise, and make things as simple as possible. But those are the things, so in my experience, those are the things that really work when they're as simple as possible. All right, so let's look at some recent examples of strategy number 4 in action. Most of these are about within the last month. Some would happen within the last week or so. And remember, everything you're seeing today is coming from a display from our platform, the PTS Primo Charting platform, designed to teach traders how to trade. It's like having your own personal mentor sit right next to you, because I'll show you the process, what you have to go through. It would be just as if I were sitting next to you to check your work, to make sure you're understanding. And remember, in our courses, it's not a black box course. In other words, we don't just say, just click on the button and see what the buys or sells are for today. No, we teach you and want you to understand what to look for. I am at the point now where I just have to look at a chart and I know if there's a buy or sell signal. I don't need any arrows. But while you're learning, we give you different ways and techniques to learn and to check your work. But ultimately, I want you to get to that level where you can just look at a chart and know and say to yourself, well, that's a strategy 4 buy signal, or that's a strategy number 4 sell signal. That's what I want to instill on all of you. Okay, so let's look at some recent buy examples, okay? Let's go through the process on our platform that you would be doing if you're a member of this course. Okay, we're looking at this chart here in SGEM. This is coming into April. Most traders who aren't students of mine would simply look at this and say, Steve, this is a kind of a directionless chart here. We're just in a range, right? Every time we hit the bottom, we go back up. Every time we hit the top, we go back down. And so I'm going to stay away from this until it breaks out. You know, I'll wait for it to tell me. You always say, listen to the market. Well, I'm listening to it. I'm waiting for a breakout to the upside or the downside. Well, you may have to wait a long time because you don't know how long this will last. Why don't we listen to the market right now? Because we want to know what the overall trend is first. And the simplest thing to do is on our platform, click on strategy number 4. In the drop-down menu, click on indicator. The indicator is the 50-period moving average. Now, what do we ask ourselves? We say, where is price in relation to that? Obviously, price is above. So we may be in a range for now, but the overall trend is up. So we're looking to buy. That's the only bias we have at this point. That's the only perspective we have, to buy. We're not interested in selling anything. I don't care if some guy in a chat room says, you got to sell this. The earnings are going to be terrible. It can't get through that top range, so we got to sell it. It doesn't matter. There's tons of reasons and justifications for selling this. If we're above the 50, the odds are in your favor to go long. But we can't just buy at the market. We need some structure. And that structure is in the form of strategy number 4, the rules. Now, there's only 4 rules in strategy number 4. But guess what? You already know 2 of them. First rule is we're above the 50. Second one is we want to look for a bar that closes in the top 25%. Now, we have a lot of bars here. We have one bar here. We have another bar here. Here's another one. Here's another one. But not all of them meet the requirements. So remember, you're going to learn exactly what the full requirements are, what the remaining 2 rules are. But before you do, let's say you want to check your work. Now, you can't call me up every 5 minutes every time you get a signal. So the best thing on our platform is to click on strategy 4. And in the drop-down menu, click on signal arrows. And this is how you check your work. Now, 3 of these bars met the requirements. So the market, according to strategy 4, has been telling you it wants to go higher, and it's been giving you some nice buy signals. And then look what happened. Ultimately, it did break out to the upside, and you could have potentially made 18 points. That's how simple trading can be. Here's another example, VRTX, okay? Now, this is a little bit more advanced, but still, we see here that we're kind of oscillating above, below the 50-period moving average. This is where beginning students have difficulty. They say, well, Steve, we're not really above or below here. We're kind of lying right on the 50. But look where all the closes are, above, 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 above. So this is still okay. Remember, it's just where price closes, either above or below. Now we look for bars that close in the top 25%, and we see a few there, and then we add the remaining requirements. And after that, we see that we have a buy signal right here, okay? So where someone may say, gosh, it didn't look like anything's happening here. A buy signal was generated, and coming into April, 48 points you could have potentially captured. Now, I know a lot of you are saying, well, how do I get out? Or where do I place my stop? Or how do I track this trade? What if I wanted to buy more? What if I wanted to, track the trade and raise my stop? All of that is taught in the course. So don't worry, we don't keep you hanging there and say, well, get out wherever you choose. It's not up to us. We give you upwards of 7 different entries, 7 different exits, and 7 different stop placements to choose from. Therefore, you can look and see which ones make you feel the most comfortable, and you decide. You can mix and match. See, these are not systems where everything has to be traded the exact same way. We give you the power to be a part of the process, and you make your own trading decisions. That's how you become consistent. All right, here's an example in Costco, okay? Coming into April, the last week of March, coming into April, we're above the 50. This bar closed in the top 25. These bars did too, but they didn't meet the requirements, but this one did. And 55 points coming into last week. Here's another example, REGN. Someone would say, well, Steve, look, we topped out here. Look at this big down day here. That's telling me, that chat room, that you got to get out. It topped out. Well, once again, when you make your decisions based off someone or something else, most of the time it's not going to work out. If you don't believe me, look at the statistics of winning to losing traders. And I don't mean winning that you had a winning month. I mean traders that have won and continue to make profits, or traders that have lost everything. Basically, 85% of all traders fail, meaning they lose everything that they've set aside for traders. And if most traders base their decisions off of listening to someone or something else, obviously that doesn't work. The odds are telling you that that's really not profitable. Remember, we want you to be in charge of your trading destiny. So how do we do that? Well, we're above the 50. We see a bar that closed in the top 25%. It made all the requirements, so it's a buy signal. Where some guy in a chat room may have said, you have to sell it here. It's a bad signal. We could have gotten long and potentially made 58 points coming into last week once again. Here's an example in DXCM. Now, price was originally below the 50. And then we crossed right here. Now, remember, some of my students would say, well, Steve, why didn't we just buy it here when it closed above? Remember, just because we close above is not a buy signal. That means the overall trend is up. That's all it's telling us. The next thing we have to do, once we find out what the overall trend is that we have to find and meet all the requirements in some structure. And the structure is strategy number 4. And all the requirements were met right here. So now we can buy. This was just a couple of weeks ago, 65 points coming into the first week in April. Now let's look at some sell examples because it works on both sides, works on all markets, all time frames, and in either direction. Here's an example in Apple. Okay, obviously we've been going lower in Apple. Okay, this was a month or so ago coming into March. So you could say we're in a downtrend, even if it's a short-term downtrend. It's pretty safe to say we're in a downtrend. But then look what happened the next day. We opened much lower, but closed higher. Now, if you go to any chat rooms or trading rooms, what's the first thing they'll say? This is a textbook example, a classic example of a reversal. You open lower, gap opening much lower, and you close higher. So what is this telling us? It's telling us that the market wants to go higher, right? Well, not really. See, this is the way we're all taught. Let's find out what the overall trend is first. Now, had you taken that or believed in what some guy in a chat room said, for the next week, you would have said, see, I was right, Steve. Look, we went up for a week or so. But once we add our indicator on the platform, we ask ourselves, where is price in relation to that? Price is below. And this is a perfect example of what I said. Many times you'll see examples of where the stock rises and you say to yourself, gosh, well, I wish I would have bought it, but according to Steve, he says not to buy anything below the 50, and I missed a really nice run up. Well, sure. But remember, the odds are in your favor that you'll do much better if you're in sync with the 50-period moving average. Why? Well, let's say you had bought right here off this reversal, okay? And for 2 or 3 days, you're feeling real good about yourself, even though this day closed lower. But if you were a student of mine, you would have said, well, let me check my work here because I think I see something. Click on strategy 4, click on signal arrows, and guess what? You're right. That's a sell signal. So if you had bought it and then sold it, you basically would have made just a little or had to be quick and maybe broken even. But most traders, what they do is they say, well, hey, this thing really reversed. A reversal doesn't mean a reversal for a week. We're going to probably go up for the next month, right? So they'll hold on to their position and then look what happens, okay? Pretty soon that long position turned into a loss, and then you're hoping and praying for the stock to turn around. Whereas if you just stayed in sync with the overall trend and applied some structure in terms of strategy number 4, you wouldn't have got caught in to this, fake out buyout and just gone short and potentially could have made 15 points coming in to the middle of last month. There's another example, okay? Now, remember we talked about consistency. Remember, most traders think consistency means, well, this makes money all the time. It's really consistent. No, consistency means that you have an awareness that you will have losses from time to time. That's perfectly natural. I remember once hearing a friend of mine saying that he wanted to learn how to ski, but he didn't want to ever fall down. And I said, well, everyone falls down. Even the greatest skiers fall down. He goes, well, I don't want to ever fall down. I just want to be able to learn and always. And that's just like trading. That's like saying, I want to be able to trade. I never want to lose. I just want to always, have a winner. It's impossible. The greatest traders still lose. What you want to do is have a method that's able to recoup those losses. For example, here's a sell signal in SWKS, Skyworks, all right? All the rules and requirements are met. We're below the 50. We close on the bottom 25%, and the remaining requirements are met. And look what happened. It didn't go down. It went higher. And if we used one of our standard stop placements, most likely we would have been stopped out with roughly a 5-point loss, okay? Not a big one, but still, you don't want to take a loss. All right. Now, most traders at this point would be calling me for a refund or saying, this stuff doesn't work. Or, Steve, I thought you promised me that it was going to be a consistent method. Well, remember, you have to stay in the game. You have to be a part of the process because look what happened. Now we're above the 50, but just for one, then back down, and then one again. And then look what happened on the next bar. We're right back down again. And where do we close? In the bottom 25%. And guess what? It made all of the requirements for strategy number 4, sell signal. So the good news is you should be getting back in because you could have potentially made back that 5-point you lost and then potentially could have made 10 more points. So this is what we mean by consistency, an awareness that you will have losses, but a method that's able to recoup those losses, sometimes sooner than later. All right, let's look at this example right now. This is an NXPI coming into this month, April. All right, we're below the 50. And this is that I said before, students, especially beginning students, will say, well, Steve, we closed above So the overall trend is up now, right? And that means I can just buy, right? No. The rule of thumb is you need anywhere from 2 to 5 closes, either below or above, to tell you that the overall trend has changed. Now, how many closes do we have above here? We only have 1. So that's not enough to tell us that the overall trend is up. We would need at least 1 or 2 more. And look what happened on the very next bar. We went right back down again, and we generated a sell signal. So had you taken that and just jumped in blindly without really following the rules, you would have missed a nice sell setup where you could have potentially made 22 points coming into last week. Here's another example in TEAM, all right? Same thing, we closed up above and then right back down. You could have potentially made 40 quick points. And then when the market started to bounce again, going against what most people would say, well, Steve, you got to cover now, right? Look at this. We have a bullish engulfing pattern right here, reversal. We're going back up. But remember, what we teach is first to find out what the overall trend is. And even though we've bounced, the overall trend is still down. So this is a selling opportunity. And had you looked at the market that way, you could have taken advantage of another sell signal and potentially captured 70 points to the downside. See, this is where traders usually get their losses, because someone in a chat room, some guy on TV will say, hey, you got to buy it right here. It's going to go to the moon now. It bottomed out. They get caught in this fake because price is below the 50. And then they turn into a long-term investor. Here's an example in Netflix. Okay, this is going back to the beginning of the year. But look at this, is what we call a confluence or a consecutive signals. This is what we often refer to as cluster signals because they appear right next to each other. These are high probability setups. They're not guaranteed, but they're high probability. When you get a bunch of sell signals next to each other, that most likely you're going to get a big move. And as we can see at the beginning of the year, that was a nice 280-point downward move. Now look at how we gap down here. Obviously, some news came out that caused the stock to really gap down sharply. Isn't it amazing how strategy number 4 generated a cluster of sell signals weeks, if not a month in advance of that news coming out? So this, once again, is why we have no interest in looking at news. I have stopped looking at news for the past 4 decades. I don't concern myself with any news. I'm never interested in earnings. If you feel you must know that information, then fine. But we teach nothing about earnings or news or following or trading ahead or behind the news. It makes no difference. We just look at price and we decide whether we want to take the trade or not. Now, once this trade a couple of months ago bottomed out, looks like it's rising again. This is where most traders get caught and say, hey, I'm going to pick up some cheap stock. The stock was trading around $600, $620. Now it's down to $450. Wow, this is some inexpensive stock. I'm going to buy some calls. But look what happened. The very next day, a sell signal was generated. And this is why most traders fail, because you're out of sync with the overall trend. Now, sure, this was a nice, really great bounce here for 1 week. But wouldn't you have rather taken advantage of the strong sell-off? See, that's what we mean by being in sync with the market and letting the market tell you, because it's telling you just about everything you need to know. Now, real quickly, let's look at some different markets and some different time frames, because remember, strategy 4 can be applied to any market, any time frame. Here's an example in a 4-hour chart of the euro dollar. Sell signal generated here, and you could have potentially captured 170 pips. Coming into, this was just into last week on a 4-hour chart. It's about $1,700 per unit, potentially. Here is a weekly chart of Bitcoin, okay, the crypto. Now, this was going back to last year, to July, when it came all the way down. It was really selling off. Most traders would say, well, gosh, I don't know if I want to touch this or not, but a buy signal was generated right here. And coming into the beginning of the year, we went up over 32,000 points. I know crypto is going down now, but I just wanted to show you different examples. Now, let's look at some weekly examples, because I know some students of ours are swing traders, and they only look at weekly bars, okay? So we've already looked at a daily bar. We've already looked at intraday bars. Let's look at weekly bars. All right, here's an example in DLTR. Now, it looks like we have a really nice run up, but we can't get through this level here. Most traders would say there's resistance. Maybe that's where all the institutions are selling. Just doesn't want to get through here. So most likely we'll stay away from this, right? Looks like it's going lower. Maybe it's going to come down and fill this gap right here. All right, to see how all my observations and judgments are based on someone or something else. But what is the market telling me? We go through the exact same process, regardless of what time frame, regardless of what market. First thing you do is click on strategy number 4 and go to indicators. That's it. and price is above. Even though we've sold off for the last couple of months here, price is still above. So we're looking for buy setups, but we can't just buy at the market. We have to have structure in the form of strategy number 4. And what do we have here? Well, click on the strategy 4 tab again in the drop-down menu, click on signal arrows, and we have a buy signal right here in February. Had you taken that, potentially you could have captured 28 points coming into this month, okay? And this is the beauty of this, is that you didn't have to buy and wait for it to go up and then come all the way down and hold it and then finally wait for it to go back up. The minute you bought, it's just been going up ever since. This can also happen to the downside in Zoom. Here's a weekly chart in Zoom last year, coming into this year. Most traders would say, hey, Steve, I belong to that trading room and they really love this stock. They say, look at it. Basically, there's major support right here. This is where all the banks and all the institutions are buying. And there's a bullish engulfing pattern right here. And this thing is just going to scream to the upside. It's going to make brand new highs. The earnings are coming out. They're going to be great. And look what's happened with the pandemic and everything with Zoom. This is phenomenal stock. This is a $1,000 stock. So I got to buy this for my long-term portfolio. All right. Does it sound familiar? Just the way you make your trading decisions? It's the way I did 45 years ago. So nothing much has changed, right? What is the market telling us? Click on strategy number 4. In the drop-down menu, click on indicator. And it's been telling us for a while the overall trend is down. So you don't want to buy this. Remember, the odds are in your favor that it will be going lower. And that if you want to buy it, wait for it to get above the 50. Well, now you say to yourself, well, maybe I should buy some puts or maybe I should sell my position. But is there a sell signal here? Click on strategy 4. Click on signal arrows. Yep, right here in November, there was a sell signal on a weekly chart of Zoom, roughly at about $270. Stock fell 160 points coming into March. Now, what if you had taken that advice about the institutions having support right here? Most likely you'd turn into a long-term investor. You've lost probably over half your investment, and you're hoping and praying for this to come back. This is why most traders fail. You have to be in charge of your own trading decisions. The main way to do that is by having someone provide you with things that have stood the test of time and give you different variables, different options for decision making, but then let you decide what makes you feel the most comfortable. All right, so let's recap before we go into the question and answer period. Remember, use these 2 edges to really help you trade. Remember, they make up the first 2 rules of strategy number 4. That's by applying the 50-period moving average and then by looking for bars that close either in the top or bottom 25% of their range. If you have those 2 things together, there's no need to look at different time frames. There's no need to look at news, in my opinion. There's no need to have tons of indicators, because right there you have the overall and the short-term trend in sync with one another. Now, these are the first preliminary rules to strategy number 4, a method I've been trading for 45 years now. And then lastly, to make it as simple as possible, apply the PTS Primo charting platform. It's like having your own personal mentor sit right there with you, because it can actually confirm if you're properly identifying a valid strategy number 4 signal or not. It's all one click away, the way I just shared with you. Remember, strategy number 4 can be applied to any market, any time frame, and virtually any direction. That's why we call it our most consistent method today. And everything you saw today is one click away on our platform. Why? Because it teaches traders how to trade. So ask yourself, do you think strategy number 4 can help your trading in 2022? If your answer is yes, which I think most of you agree, well, we have a great offer for all of you today. Special offer, discount. This is our most consistent strategy offer. It's strategy number 4. You're going to get instant course access, detailed instruction. Remember, we talked about all the different entries, exits, and stop placement points. That's all included in the course. Now, here's the best thing I think about this. We're also going to throw in a full year of the PTS Primo charting platform free, absolutely free. Now, that's a nearly $1,200 value. Now, with the platform, you're not just getting strategy number 4 and that's it. There are a host of other different tools, methods, and indicators that you won't find anywhere else that are able to be accessed on the platform as well. Things like the enhanced buy sell line features, the strength of trend tool, signal scanner, auto-generated exit levels, over 90 technical indicators, personalized tech support, and like I said, dozens more things that I've taken from the floor, my years on the floor, and you'll only find on our platform. But here's what I think is one of the best things, because we know there are just, not just one or two stocks that traders look at. There are literally dozens, if not hundreds of stocks traders like to look at on a nightly basis. So this is worth its weight in gold, in my opinion, the signal scanner. You can scan on a nightly basis for strategy number 4 signals. You can decide if you want to take one or not the night before. For example, here's how simple it is. Remember in the drop-down menu, we talked about signal arrows and indicator? Well, instead of doing that, all you'd have to do is click on scanner. And you'd see this page appear, all right? Click on load symbols, and we provide you with a list of different markets, ETFs, cryptos, currency pairs, futures, different exchanges such as the European markets or even Canadian markets, or S&P 500 or the NASDAQ, whatever you want, all right? Then whatever market you choose, you'll see it appear in this little spreadsheet, all of the data. Click on scan. That's it. And in a matter of, I'd say, less than a minute, you'll see a series of either green or red horizontal bars. The corresponding green bar tells you a buy signal in that corresponding stock. And the red one, obviously, is a sell signal. Now, had you scanned, let's say about a week or so ago, you would have seen that there was a buy signal on the night of the 4th in Orly, O-R-L-Y, O'Reilly Automobile. We call it Orly. Now, obviously, we're above the 50, and we have a bar that closed in the top 25%, but that didn't meet the requirements, but this bar did. Now, where everyone may have thought, well, I don't know here, it's kind of scary, we're going lower. A buy signal was generated. You could have bought options, you could have bought the stock, maybe an odd lot, but O'Reilly gained 60 points in 4 days, okay? This was coming into last week. So we always like to show you things that are recent, because I know I've gone to webinars myself where I've seen some tremendous signals, some tremendous home runs, and then I see that the date that they don't mention, and the date was like 2 years ago. It's very easy to cherry pick some great winners, 5 years ago. But you want to find things that really work well within the last month or weeks or even days. So this just happened a little over a week ago, okay? Where you could have potentially made 60 points in just 4 days. And you could have scanned for that the night before and seen that that was a valid signal. All right, so let's break it down. Strategy number 4, complete course, all the detailed instruction and the rules, that's $995 value. And that includes the scanner, okay? A full year of the PTS Primo charting platform is $1180, right? When you put those together, the price is normally $2175, close to $2,200. Now we realize that's a little bit too high. So what we're going to do is cut it down roughly by 55%. Only going to charge you $995 for the complete course and rules manual, okay? You're going to save $1,180. That's a 55% discount. That's a tremendous deal. You're only paying for the actual course, but you're getting a full year of the platform along with all the other things included, like the scanner and all these different techniques and methods also included on the platform, okay? You owe it to yourself to take your trading to the next level. If you've been struggling, if you're frustrated, if you're not seeing the type of results you were promised, trust in what the market is telling you. The market's always telling you, like my mentors taught me, what it wants to do. You simply have to learn how to listen, and you can learn how to do that in the strategy number 4 course. Here's how to take advantage of this. Contact ProTrader Strategies. They're my sister site. I teamed up with them, and they're in charge of all the discounts. They're in charge of all the tech support with the platform, and they put together the pricing. So they're very flexible. They would be more than happy to work with you, and you can call them directly at area code 310-598-6677. Their trading consultants will answer any question that you may have concerning pricing, concerning the platform, concerning data, things of that nature. And they're very highly skilled, and they'd be happy to work with you. And the main thing is there's absolutely no obligation, all right? They can give you a quote if you're looking for a payment plan, or they can actually, take your order over the phone if you're ready to sign up and become a member of the course, okay? I'm gonna leave this information up here. If you have any questions, we have about 10 or 15 minutes left in the presentation. Now is the time. Just simply go to the chat box on the Zoom page. I believe it's on the, it's either on the top or bottom of your page, and just simply type in whatever you're interested in, and I will answer the questions to the best of my ability, okay? I think someone asked this question earlier before I showed the final results, but they were saying, does it work on currency pairs? Yes, it does. I showed you an example. I believe it was in the Australian dollar, or I don't recall if it was Australian or Euro dollar. But yes, it does. We have tons of strategy number 4 students. We have a lot of European members that like to trade currency pairs, and we have tons of strategy 4 students that are trading this overseas. So yeah, it works. Remember, it makes no difference what market or what time frame. I personally, when someone's asking, okay, when do you use it? Well, I'm not going to tell you how I use it or what entry point I use or what exit, because remember, you have to decide what works for you. But I'll tell you that I use it intraday on E-mini futures because that's the market I like to trade. My background is in day trading, because when you're trading on the floor of the stock exchange, you're basically getting out of trades in like 5 to 10 minutes, sometimes even just 1 minute. So I learned how to trade that way, and that's kind of my my skill set. So I like to use strategy 4 intraday trading, and I don't hold positions overnight. I just simply get in and out during the day, but basically using the same exact rules that you're seeing right now on an E-mini futures chart. The time frame, where to enter, where to exit, where to place my stop. Those are all things that are taught separately within the course that you'll learn how to decide for yourself. Someone's asking a question that pertains to that exactly. They were saying, well, how do I know what to decide for? Well, it's like, we like to describe it like a buffet line, okay? Imagine when you go to a buffet restaurant, you walk in and there's a full-on buffet of different entrees, different beverages, different desserts. Now, everyone has a different idea of what they like or what they feel comfortable with. One person may say, well, I'm going to have a tuna salad, and I'll take an iced tea, and I'll take cheesecake for my dessert. And someone would say, no, I want the beef, and I like some mashed potatoes and some broccoli on the side, and I'll take a glass of wine, and I like a piece of chocolate cake for dessert. So someone else may just say, no, I just want an appetizer. I don't want anything. Everyone is going to be satisfied at the very end of their meal because they got to feast on what they like. So in the end, the common denominator is they're all satisfied with their meal. It's the same way with trading. We have all these different variables, a buffet of different entries, different exits, different stop placement. You can experiment and paper trade to see which one makes you feel the most comfortable. And at the end, that's how you become consistent. You see, you will never be a consistent trader if you're trading something that doesn't make you feel comfortable. Let's say some webinar, which I've attended before in the past, they promise the world, and this system never loses. It's got 90% returns. It's had 20 years of winning, profitable statements and all this stuff, all right? You say to yourself, I've got to buy this. I spent $10,000, sounds great. Then once you get the rules to it, you find out that you've got to trade 20 to 30 times a day. And you say to yourself, I can't do that. I go crazy. I don't have enough time to trade 30, 40 times a day, all right? But that's how you get those results. That's how you produce that. But you won't feel comfortable doing it. So most likely, because you're out of sync with what makes you feel comfortable, you won't achieve those type of results. And you'll say to yourself, how come I'm not making the type of results they show in the webinars, and I'm trading the exact same system? It's because you're not in your comfort zone. And it can work in the opposite way too. And maybe if there's an amazing system that's going back 30 years that just produces amazing results, and you finally purchase it for $10,000, $20,000, and it trades once a year. And you say to yourself, I can't just trade once a year. I can't live off that. I mean, I'm not going to wait once a year. And what am I going to do the rest of the time? But even though it gets those results, you're not going to feel comfortable. So you're going to second guess it. You're going to want to produce more signals. You're going to tweak the rules. So ultimately, it comes down to you have to trade what makes you feel comfortable. And simply listening to some guy in a chat room or what some guy on TV says is not going to get you there, because maybe that's what's comfortable for them. But it doesn't mean that you're going to feel comfortable, so you won't get the same results. The only way you will become a consistent trader is by making your own trading decisions. That's our credo, that's our philosophy, and that's what we're here for, to provide you with information and to work alongside of you to help you make those trading decisions, okay? So I hope that answers your questions. I think that's it. If there are no further questions, remember, even if you just are interested in pricing or maybe a payment plan, contact Pro Trader Strategies. There's absolutely no obligation. They would be more than happy to work with you or simply answer your questions and give you a few days to think about it. Call them directly at area code 310-598-6677. They're very flexible. They'd be happy to work with you, okay? All right, as we close up and take one last look at our disclaimer, I want to say thank you so much for taking time out of your Wednesday to join us. I hope you learned something. I hope you learned something about those two edges and about our philosophy of trading. But most especially, I look forward to all of you becoming students of mine in the Strategy Number 4 course. Have a great day and a great week. I'll see you next time. Bye-bye.